Hi everyone, Barry Brooksby here. Welcome to my Wealth Optimized YouTube channel. Today we're going to be looking at a high cash value whole life policy that's properly structured to build maximum cash value. Before we get into the numbers, I want to ask you a question. Where are you currently saving and investing money? Most of you have invested in a 401k, IRA, a brokerage account, something like that in the stock market. The problem with those types of investments is they're volatile. You can lose money. And when you take the money out, it's 100% taxable. What I'm going to show you today are amazing benefits of high cash value whole life insurance. The reason we promote and highly recommend having high cash value insurance in your portfolio is because it's an asset, number one, that grows guaranteed every year. Two, you have access to liquid cash before the age of 59 and a half without a 10% early withdrawal penalty. You can't do that in a 401k or IRA or you're going to get hit with that penalty. The policy, when it's properly structured, you're able to use that money 100% tax-free. And that's what you want, tax-free income, tax-free money now. There's another strategy for this called infinite banking. So this policy can be used right now as your own bank as well. So let's get into the numbers, and I want you to see how a properly structured high cash value policy will become an asset for you. Now, the amount of premium you put into a policy, that's up to you. This particular illustration is designed at $2,000 a month or $24,000 a year. And you see the contract premium, total premium going into the policy in this column. Where we want to focus our attention is in the total net cash value column. This is your money. This is what you have access to. And life insurance companies allow you to tap into cash value as soon as 30 days after the policy is in force. Again, you're growing money guaranteed, cash is liquid, and if you follow what I teach you, you'll be able to use all the money and all the gains, all the growth 100% tax-free. You'll notice as time goes on, the cash value is always getting larger because of compound interest. For example, from year 5 to 6, the cash value grows from $114,000 to $143,000. That's a $28,000 gain. From year 9 to year 10, the cash value grows from $239,000 to $275,000. That's a $35,000 gain. So as you can see, the compounding really takes off the more time that you're into the policy. The other thing you're going to notice is this column right here that says total net death benefit. This is a whole life policy, but we have reduced the amount of life insurance that you're purchasing so that most of your premium is going into cash value. This death benefit is also getting larger. Now, you can use this for estate planning, legacy planning. Some of you might have heard of the book called What Would the Rockefellers Do or What Would Billionaires Do? This is legacy planning at its finest because when you pass away, whether you pass away at 85 or 105, there will be a permanent death benefit that passes to your beneficiaries, in most cases, completely tax-free. Now, again, the focus is on cash value. The reason this is a properly structured policy is because it has two very important riders. One is a term insurance rider. You might say, well, Barry, didn't I just hear you say this is a whole life policy? Yes, it is a whole life policy. But the term rider raises what's called the MEC limit so you can get more cash in the policy. The second rider that is an absolute must is called PUA, Paid Up Additions. PUA turbocharges your cash value growth. You'll notice here in the first year, the cash value is $18,071. If this were a traditional old style whole life policy, your first year cash value would be $0 because most whole life policies don't have a PUA rider. And look, as a life insurance advisor, all of us are compensated on base premium, which is the money going towards the life insurance. These policies have less of your premium going towards the base premium. Most agents don't know how to structure the policies correctly, and most agents that do know how to structure policies properly may not want to lower your base premium to the bare bones minimum because it reduces their commissions. So make sure you're working with a life insurance advisor that gives you the highest cash value growth possible when you want a high cash value whole life policy. Well, this $18,071, this is your first year cash value as opposed to zero, like I mentioned in the old style whole life. And the life insurance companies give you a guaranteed rate of return and you earn an annual dividend. Now, to be fair, the annual dividend, it's not guaranteed. But this company we're looking at right here is 177 years old. They've never missed a single year of paying a dividend. So although the dividend isn't guaranteed, we believe you will continue to earn a dividend. It's paid annually, and by default, we have it reinvested back into your policy cash value so that you're earning compound interest on your dividend too. The other thing I want you to notice about this policy that we're going to get into right now is income. This policy is also set up to be a tax-free stream of retirement income for you. There's a name for this, some of you might have heard, called a LIRP, L-I-R-P, Life Insurance Retirement Plan. Let's look at the income so you can see how this will work in your future. This policy is being funded at $2,000 a month or $24,000 a year for a total of 30 years. In the 31st year, there's no more premium going into the policy. You're done funding. Now, you could fund a policy for 10 years. You could fund a policy for 20 years. You could fund a policy for 50 years, okay? That's all flexible. In this example, it's a 30-year funding time frame. And at the age of 65, this person is going to start taking out income at $120,000 a year. This is tax-free money. It's not reported on your 1040 tax form, and you don't have to talk to your CPA about it. It truly is tax-free income. And this $120,000 a year continues on for a total of 24 years. Now notice, there was $720,000 that went into the policy. And if we do the math, $120,000 a year times 24 years, that's $2,880,000 that you're able to take out as tax-free income. This illustration only had $720,000 going into it. So if you can take out $2.8 million tax-free and leave your beneficiaries a tax-free death benefit of $798,000, that's over $3.6 million that you are able to spend and enjoy tax-free and leave to your beneficiaries. These policies have remarkable benefits, but they must be properly structured if you want to grow maximum cash value. So I would invite you, look at your own numbers. You can schedule a call, check the link below, subscribe to my channel so that you get the most recent financial education about high cash value whole life, infinite banking, tax-free use of money, and the many benefits from a properly structured high cash value whole life policy.